Hey everybody, Justin Young with Agents Resource Group and Senior Life. And today we're shooting this training content for you on the actual particular product and plan types that Senior Life has to offer. Okay, so we're going to be going over that in a little more specificity here today and shooting this video so that it will be obviously on our YouTube channel there at Agents Resource Group as an ongoing resource for you or any new agents that you may bring on with us here at Senior Life. So when we send this out initially to you, you'll just need to look in that same email and or text, and we will be including the actual PDF graphics. It's like a graph where it lays out the actual particulars on each plan type, okay? And you'll have that to follow along with as you watch this video, just again to be an added resource for you. Of course, at Senior Life Insurance Company, our thrust in business is whole life insurance, okay? Final expense, whole life insurance, covering those needs at end of life for you and or your family members. At Agents Resource Group, even long before we were part of the Senior Life family, final expense, whole life insurance has always been the thrust of our business. It's something that we're very familiar with. And so the great thing about Senior Life is you don't have 100 different product and plan types to try to get figured out. We're not dealing with a ton of different carriers. We're exclusive with Senior Life, and it really makes things simple for you, the agent, when you're in the process of helping a client and making a sale. And then also there's the Slice app, and the fact that the Slice app really streamlines the field underwriting process. And so it's not going to give you the full list of products. Once you go through and answer those health questions and put their general information and their medications in, it's only going to generate in the Slice app what plans that they will actually qualify for. So you're not at risk at that point of signing them up for some plan that's due to age or tobacco usage or something that they don't even qualify for. So that is a great blessing when you're in the field and sitting in front of a client or on the phone with a prospect or a client and trying to get your sale closed out, then you're not wasting a lot of time there. So it really streamlines that. And it's still important though, even though it handles a lot of that underwriting and eliminates plans they don't qualify for, it's still important for you, the agent, to know, what the actual specifics are of each plan type. So we want to start with the whole life, the final expense, the immediate benefit coverage that we have. Okay, so this is whole life insurance, and a lot of times people get confused. They say, well, if you're new to the industry, well, is final expense, is that different than whole life insurance? No, whole life insurance is what we say. A final expense is more of an industry jargon term that's dealing with smaller face amounts, as we do normally, of $30,000 or less in coverage, specifically designed for that whole life insurance to cover any final expenses, okay? So just always like to clarify that, because hey, if you're brand new to the industry, a lot of people don't know. I don't know how many times I've been asked, we know what whole life insurance is, but what is final expense? It's one and the same. You might say mama, and I might say mother, okay? But particularly final expenses, lesser face amount, whole life insurance plans that are specifically designed and designated to pay for end-of-life final expenses. So we're going to start with the immediate benefit plans. Of course, we have ultimate preferred, and then you have super preferred, and then from there we go down to just preferred. From there we go to standard, and from standard we get into the actual, there's a 20 pay whole life, where if they want to pay a little more in premium but they want it completely paid up in 20 years, that's available, 20 pay. And then there's an actual standard as well. So those plans are all in the immediate whole life benefit plan, okay? And then from there you also have the limited benefit plans, all right? And there you're dealing with, if they don't qualify for an immediate day one coverage, then the next plan they would qualify for is our actual modified plan. And then from modified, we go to guaranteed issue, okay? So those are an overview of the plan types. Again, you'll have that in front of you if you're just opening this and we've sent it to you. And so we want to kind of go a little more specific breakdown. So ultimate preferred, obviously you have to be the ultimate preferred, okay? It's in the name. You got to be ultra healthy to be able to qualify for that plan. And that's if you're 0 to age 85, they can qualify for ultimate preferred. But the difference there is the face amount starts with $10,000. So you can't write a $4, $5, $6, $7, $8,000 policy under that ultimate preferred rate. It's $10,000 to $30,000. Okay, so they can get an amount of coverage between $10,000 or $30,000. Very extremely good rate, best rate in the country on any final expense life insurance product that you're going to find. Important to remember though, that's why Senior Life did create this product. Okay, it will undercut pretty much anything out there, but that's not what we're trying to do. We're trying to provide a service to people that need whole life insurance. They need the legacy plan. All right, you get what you pay for in life. So this is a tool there that if you needed to be competitive and they qualify and they're very healthy, you can be extremely competitive with this rate. However, because it is such a low premium for this product, it does pay a little less commission. And that may be new to some of you, but you just need to understand very practically that is a plan that Senior Life put in place that helps us be able to serve ultra healthy folks, but it's also going to pay a little less commission. And so it's just important to remember that. You can look at your actual commission chart that you were given whenever you contracted with us to see what the differences is on that. It's going to be around 20% less commission, but it does enable us as a company to be able to market that we have the most inexpensive final expense premium available in the nation, and that's important. So ultimate preferred, again, it's going to cover ages 0 to 85, and it's going to start at $10,000 and go up to $30,000. Okay. Obviously, if you're a tobacco user, if you're on any multiple medications, you're not going to qualify for that plan. So then you would go super preferred. This is what a lot of times when you go through the process, ultimate preferred won't even populate, like I mentioned earlier, if they do not qualify for that. So then that list of products from top to bottom is going to start with super preferred that they would qualify for. So with super preferred, it starts at $5,000. So you can't write a $1,000, $2,000, $3,000, $4,000 policy under the super preferred plan. It's going to start at $5,000 and go to $30,000. Covers ages 0 to 85, and that's for people that have little to no medications or health issues. All right. So super preferred, you're going to see a good bit of when you're out in the field or on the phone talking with folks. Okay. And no commission difference there whatsoever. It's going to pay your full commission rate. From there we go to preferred. So these are for some people that have some more minor health issues. Okay, they're not going to qualify for super preferred, but they will go preferred. And again, that's going to cover ages 0 to age 85. And on this, it goes from $1,000 in coverage to $20,000. Okay, so it caps at $20,000, but we can write them any amount of coverage between $1,000 and $20,000 in face amount, death benefit, with this particular plan type. So that's preferred. Again, that's going to be still no tobacco users are going to qualify for that plan, and it's going to have to be people with more minor health issues that qualify for preferred. As a reminder, again, in the Slice app, it's only going to give you what they qualify for, and it's going to start with the best available plan with the best rate and go down. Okay. Obviously, if they qualify for super preferred, you don't want to skip down and put them in preferred. Okay. And if they qualify with the same example for preferred, you don't want to go down and sign them up as guaranteed issue, because they're going to pay a much higher rate than necessary. The only caveat to what I just said is, for some of you, sometimes folks, they may not even be able to afford, say, $8,000 in coverage with a super preferred or preferred plan. they may be looking for just, enough coverage for cremation, okay, a lot lesser expense. Well, you're not going to be able to maybe make that sale if it's, an $8,000 plan for, say, $72 a month. Maybe their budget is only $34 or $48 a month. Well, in that case, that's where you would skip down. You're not going to put them in a modified or a guaranteed issue, but you would skip down to standard, which we're about to talk about. That starts at $1,000 in coverage and would go all the way up to $20,000. Okay, so that's the way you don't walk away from a sale just because they qualify for the top plan, which is preferred or super preferred. But again, with super preferred, you're going to look at it's going to start at $5,000 in coverage, so you can't get any lower than that. So in a situation like that, don't be afraid to go to the next product type down to be able to insure them at a lesser amount of coverage that may fit their need and their budget. Okay, so I hope you're following with me there. If they need less than $5,000 in coverage, but they qualify for a super preferred plan, they can't get them less than $5,000 because that's where that plan starts. Again, don't be afraid to just go down to the next plan type. In that case, you go down to preferred, and then you can get them covered starting at $1,000, $2,000, $3,000, and that may more likely fit their budget. So we've covered ultimate preferred, we've covered super preferred, we've covered preferred, and then with standard, that's going to get in tobacco usage. If they're a tobacco user and completely healthy in every other area, it's going standard. Okay, so that's just automatic. You need to know that up front. And again, with standard, that's face amounts of coverage from 1,000 to 20,000 in coverage, covering ages 0 to 85. And that's what that plan functions as. Okay, so if they've got some health issues that are a little more significant than what preferred would qualify them for, or they're a tobacco user, it's going to automatically go preferred. That's going to be listed as your top plan that they're eligible for on your Slice app, and that would be the route you would want to go. Okay, so covering 1 to 20,000. There is a little bit of a reduction in commission on that. It's about 20% less. Again, review and go back to your commission chart from when you contracted with us. And that's one thing that I want to cover here that a lot of people don't realize. Every life insurance company in the country, okay, once you get out of those top tier, super healthy people plan types that really healthy people qualify for, as you begin to get into more limited benefit plans, the insurance carrier never pays, there's as high a commission, okay? So if you're at a 90% commission rate and you write just to give you an example, you write a standard benefit plan, okay, that's going to be 20% less, all right? So you're going to be at 70% commission on that case instead of 90. And I'm just covering this up front because a lot of times people, they're brand new to the insurance industry and they don't realize that, and they think maybe this is something that just Senior Life does, and maybe they could go represent some other company and get, if they're at 90% commission, get paid 90% across the board no matter what they sell. Listen to me, just to save you your mind wandering down a road that it doesn't need to go and wasting energy. That world does not exist, okay? You got to think about it logically. An insurance company is assuming risk, okay, and taking on risk, and they're taking on more risk the more serious issues that client or prospect has with their health, okay? So due to that, those products are going to pay less. If you're dealing with a situation where you're writing an 85-year-old, okay, even if they're completely healthy, all right, it's going to be a slight downgrade in commission because of the age that they are, okay, because mortality is higher for somebody that's 85 years old. So again, always refer back to your commission chart, but that is standard procedure. I've sold life insurance, final expense life insurance for every major player out there, okay, when we were in the broker world and represented a bunch of different companies, all right? And you just got to know that that's part of the business. And, you know, Don't sit there and let it mess with your mind. It's just quantity, quantity. Quantity solves everything. Write your business, write your policies. You're going to make a little less on some of them due to that individual's health, but you're going to deal with that with any carrier that you would ever represent, okay? Standard practices. So we went over ultimate preferred, super preferred, preferred and standard, and then you've got your 20-pay standard. And again, that's where, if you take a standard policy beside a 20-pay standard, the 20-pay standard premium is going to be more, okay? And in most cases, pretty significantly more than what the premium would be with a standard policy, because it's designed in such a way to pay that policy off in full in 20 years, and they would never have another premium after that. Okay, same way if you go take out a 15-year mortgage instead of a 30-year mortgage on your home, same dollar amount, but you're going to pay a higher payment on the 15-year than the 30, because you're going to be out of the deal in half the time. Okay, so same thing with 20-pay standard. And when you get into the 20-pay standards and you get into the term products that we'll mention here in a minute, those products, while Senior Life does not do a medical exam on those particular products, they're going to actually order medical records from their doctor to review those before issue. Okay, so it's kind of a non-medical underwriting there, what some other companies would refer to that as, which means you're not going to get paid as fast. Okay, and in some cases, Senior Life may request those medical records, a copy of those from the doctor, and he could let it sit on his desk for a month, 2 months. Okay, we encourage you to really write as little of that as possible, because you can get into some aggravations there, slow your income down. If a client is adamant that they want a term product, or they want to be done paying that 20 years, and again, you're not going to see this out of our particular demographic. Rarely ever is somebody going to be of a mindset that this is just what I just got to have. As with most sales, again, you're there, you're the expert, you're the advisor, and you're helping lead and guide them to the product that's best for them, okay? And it's going to get issued as soon as possible. Again, we always want to be able to go, the goal is to go from submitting the business, to commission, okay? We don't do this for free. We do this to help families and to help our family through income, okay? And to earn a good income, a good six-figure income minimum for our particular family. This is what we do for a living. We train you well. You're with one of the most prestigious life insurance companies in the country, one of the largest final expense life insurance companies in the nation. And, you need to be paid well and compensated well for what you do, and Senior Life does that. But we want to get from submission to commission as soon as possible. You don't want a bunch of hang-ups, and that's why we love the preferred, the super preferred, the standard product, and even the limited benefit products that I'm about to get into now with you. Because they're not ordering medical records for those. It's strictly based off of that prescription check and how that client answers those health questions. Wham, bam, thank you, ma'am. Okay, it's issued. That's what we like. And as soon as that first draft goes through and the bank communicates back to Senior Life that it went through and that everything's good, you're paid. So you're writing one business one week and getting paid on it the next. And with Senior Life, it's a daily pay. So as soon as something is issuing and paying, you're getting paid on that case. So now we'll get into the limited benefit. We've covered the immediate benefit, the limited benefit. So again, we're going from standard now on down, okay? So we've covered ultimate preferred, ultimate preferred, super preferred, preferred, standard, okay?